Welcome back, everyone, to Deep Dive. Today, we're zoning in on a specific stock with some interesting technical action. The Bank of Punjab, BOP. We've got its daily chart right here, lots of data points, and basically our mission is to sift through it all. We want to understand its current path, what's the conviction here, and maybe map out what could happen next.
Yeah, and jumping right in, the picture's pretty clear, actually. Right now, the price is sitting at 33.50 PKR. And that's after a day where it touched a high of 35.59. But the key thing, I think, is the momentum. The analysis shows a solid daily gain, plus 2.20%. So this isn't just drifting sideways. It's strong, positive movement. Tells us buyers are definitely stepping up.
Okay, let's unpack that movement then. Starting with the basics, just what does the chart look like, the visual story? Looking at those daily candles, the analysis says it's a clear, pretty consistent uptrend. Lots of green candles back to back.
Exactly. Green candles mean buyers are in control for that period. It's the visual shorthand for positive momentum. But, just trending up isn't the whole story. A trend really proves itself when it breaks through important levels, barriers.
Right. And that's where this gets interesting, isn't it? The analysis highlights a specific level.
It does. What's really fascinating here structurally is the 28 PKR level. That seems to be the big one. For quite some time, apparently, 28 TKR acted like a lid, a solid resistance point where selling pressure consistently kicked in.
Ah, okay. So when a stock manages to punch through a significant resistance like that, it's more than just the price ticking up. It's like a signal, right? A statement.
Precisely. Think of it like breaking ground on a new floor of a building. Once you get past that old roof, that resistance, suddenly you've got a foundation to build higher. That 28 PKR level, now that it's been cleared, is actually expected to become the new support, the new floor. Getting through that specific level is flagged as the critical bullish event in this whole analysis. It's key.
Got it. So visually, the story seems strong, cleared a major hurdle. But, especially in markets like the PKR exchange, things can be volatile. We can't just rely on the price action alone, can we? Sometimes trends can be, fake outs. Do the underlying numbers, the technical indicators, actually back this up?
That's exactly the right question. You have to interrogate the move. Look under the hood, past just the shape of the chart.
All right. So let's start with momentum, the NCD. Moving average convergence, divergence. The analysis gives us the numbers 3.800 for the MCD line, 3.04 for the signal line. But for listeners, it's the relationship that matters, isn't it? The blue line is clearly above the orange line here.
That relationship is everything for MACD. Essentially, it's measuring the rate of change, the acceleration of the trend. When that faster blue line is above the slower orange line, it tells you momentum is positive and actually increasing. But what makes this even more compelling, and the analysis points this out, is the positive histogram. It's not just a slight crossover. The gap between the lines is widening.
So it's not just moving up, it's actually accelerating upwards. That confirms the breakout at 28 wasn't just a random spike. It had real buying power behind it. The MACD is basically yelling, this momentum looks real.
It strongly suggests it, yeah. But you still need another layer of confirmation for conviction, for sustainability. You look at volume. Volume is the fuel in the tank.
And the source does mention volume, specifically flagging that trading volume is, and I quote, increasing steadily, along with the price rise. Now, this might sound basic, but why is that alignment, rising price and rising volume, so important for understanding if this trend is healthy?
Well, think about it. If the price shoots up, but the volume is low or falling, it suggests maybe just a few people are pushing it. Maybe it's speculative. Maybe it won't last. It's a weak move. But rising price combined with steadily increasing volume, that suggests broader participation. It suggests accumulation. Especially in a market like Pakistan's, which can swing quite a bit, seeing that alignment is really significant. It sort of de-risks the move. It hints that maybe bigger players, perhaps institutions, are actually building positions here, not just day traders hopping in and out.
That's a great point. So that rising volume makes it feel less like short-term hype and more like a deliberate, potentially sustainable move. It adds real weight to the bullish case.
Exactly right. It confirms buyer conviction. If volume had spiked early and then trailed off as the price kept rising, you'd worry about exhaustion, like the buying is running out of steam. But that steady increase suggests buyers are still interested, even at these higher levels. It backs up the MACD signal and that crucial 28 PKR break.
Perfect sense. Okay, so we've established the trend looks strong. It seems validated by the technical math, MACD, volume. Now let's get to the practical side, the roadmap. If this bullish trend holds up, Where does the analysis suggest the price could be heading? What are the targets?
The analysis lays out a couple of potential levels to watch. The first one, sort of the next logical stop from a technical, maybe psychological standpoint, is pegged at 36.50 PKR.
Okay, 36.50 first target.
Yeah. And if BOP can maintain this momentum, keep that healthy volume profile we just talked about, then the analysis points to a second, more ambitious target around the 40 PKR mark.
40 PKR. Okay, so clear upside potential outline there.
But, and this is just as important, if not more so, the conversation has to immediately include risk management. What happens if it goes the other way? The analysis identifies two key support levels below the current price. The most critical one really is that 28 PKR level we discussed earlier. Remember the old resistance? That's now expected to be the primary support floor.
That makes total sense. If the price were to fall back down and break below 28 PKR, that would basically negate this whole recent bullish structure, wouldn't it? It invalidates the rally.
Correct. A break below 28 would be a major red flag for this setup. Below that, the analysis does mention another potential support area around 25 PKR. But honestly, for anyone trading based on this recent breakout, that 28 PKR level should probably be treated as the crucial line in the sand.
Right. And this brings us to maybe the most practical piece of advice in the analysis, especially for anyone thinking about getting in now. The source is quite clear. Because the stock has already rallied significantly off its lows, it suggests new buyers should probably wait for a pullback before jumping in.
Yes. And this is absolutely critical risk management. Chasing a stock after a strong run-up like this can be dangerous. Think about it. If you buy right now, say near 33.50, your upside to the first target, 36.50, is limited. But your downside, your risk down to that key 28 PKR support level, is quite substantial.
Let me see if I get this right. Buying at 33.50 with a stop loss at 28 means you're risking 5.50 BKR per share. But your potential gain to that first target of 36.50 is only 3 PKR. That's not a great reward to risk ratio, is it? Less than 1 to 1.
Precisely. Your risk is significantly larger than your immediate potential reward. That's generally not a setup you want to take. The smarter approach, as the analysis implies, is patience. Wait for the stock to consolidate a bit. Maybe it drifts sideways. Maybe it dips slightly, perhaps towards the 30 or 31 PKR area as some early buyers take profits. That kind of pullback offers a much better entry point.
So what did that look like? Waiting for a dip to, say, 31?
Yeah, something like that. You'd watch the price action. If it pulls back towards 31 PKR and holds, maybe shows signs of support there. Now, if you enter at 31 PKR and still use that 28 PKR level as your stop loss, you're only risking 3 PKR per share. But your potential gain to the first target, 36.50, is 5.50 PKR and even more to the 40 PKR target. See how you flip the reward to risk ratio quite dramatically in your favor?
Okay. Much better odds. It really highlights the value of not chasing momentum blindly.
Exactly. That patience often makes the difference. And the analysis reinforces this by specifically suggesting 28 PKR as that example stop loss. It's your safety net based on the technical structure. If the bullish thesis fails and it breaks back below 28, you're out with a defined, managed loss.
Know your exit before you even enter. Classic advice, but always worth repeating.
It's arguably the only rule that truly matters long-term. Define the risk first. The analysis gives you the potential opportunity, but executing it smartly requires discipline around entry and that stop loss.
This has been really clear. A good breakdown of the structure, the confirmation signals, and the crucial risk management side. So let's just quickly recap the main takeaways for you listening. First off, the overall trend for Bank of Punjab. The analysis calls it strongly bullish, mainly thanks to clearing that key 28 PKR resistance.
Yep. Second, the technicals seem to agree. You've got the MESD showing accelerating positive momentum, and crucially, trading volume is rising steadily with the price, suggesting real conviction.
Right. And finally, the key levels to keep on your radar. The potential upside targets are initially 36.50 and then possibly 40 PKR. But just as important, maybe more so, is that 28 PKR level. That's your key support and the logical place for a stop loss to manage risk.
And maybe one final thought, building on the analysis's conclusion. It does suggest that if this current momentum, particularly that healthy volume, keeps up, BOP could potentially go even higher than that 40 PKR target.
So that leaves us with the provocative question to mull over, doesn't it? As you look at this technical setup, think about what else might be going on beyond just the chart. Could there be fundamental factors, maybe upcoming earnings news or broader economic shifts in Pakistan that could fuel that institutional buying conviction? What could keep this momentum going strong enough to push BOP significantly past those initial technical targets, maybe into a whole new trading range?
A good question indeed. merges the technical view with the broader context.
Absolutely. Okay, that wraps up this deep dive. Thanks for tuning in, and we'll catch you on the next one.